The crypto space has taken an absolute beating in 2022. It's been a relentless bear market all year that's caused most cryptocurrencies to fall significantly from their all-time highs, and many metrics like transactions per day and daily active users have fallen as well. And in the middle of this crypto winter that we're a part of, the million-dollar question is, what are the next big trends that can usher in the next wave of adoption to bring in more users and also capital into the space? And in this video, I want to talk about one major trend or a set of trends to watch out for in 2023 that can do just that. This has already started to happen. You can track this on chain, and I expect this to grow significantly in 2023. So I'm going to tell you everything you need to know in this video as a blockchain developer myself who's been through multiple boom and bust cycles in crypto, has watched many of these trends emerge from the ground up. So if you're new around here, hey, I'm Gregory, and on this channel I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you learn how to become a blockchain master step-by-step start to finish, land your first blockchain job, increase your salary past 100K, then head on over to dappuniversity.com/bootcamp to get started today. All right, so let's get into this. Let's talk about some of the top crypto trends for 2023 that are all converging together to make a single trend, an overarching trend that you definitely want to pay attention to over the coming year. So let's set the stage for this because this is really fixing a major problem at the core of crypto that's causing so many people to leave the space, but can actually attract more people back in. So crypto goes through these boom and bust cycles, right? We see the prices go up, we see lots of people come into the space, and then prices go down and people really flee the space, which means basically crypto has a retention problem. It can draw in lots of new users when prices are going up because people are willing to take on more risk and buy more things. But then when prices go down, people dump their tokens and check out. They stop yield farming because so many tokens have flooded the market. And a lot of this over this past year has been highly influenced by the outside economy. You know, what's going on with interest rates having a pretty big impact on all asset prices, not just crypto. Well, what if cryptocurrency and blockchain technology, Web3, all that stuff can bring in new people and also retain people, rain or shine, regardless of what's happening with overall market conditions? Well, that trend has already started to happen. There's some projects and ecosystems that have started to flourish even despite the crypto downturn. It's actually moving in the opposite direction of the prices. And that's what I want to talk about right now and dig into so that you can see how this works and what you need to watch out for over 2023 and beyond. So let's look at some data to back up this inverse correlation, this opposite direction that I'm talking about, and then talk about why it's happening. So here's the Ethereum price over the past year. Okay, it's basically gone down. We've kind of started to level out here a little bit. But look at this chart that's moving in the exact opposite direction, okay? So this number of daily transactions in the Arbitrum ecosystem, which is a layer 2 built on top of Ethereum. I'll explain that a little bit more in a minute. But even as crypto prices have gone down, this particular ecosystem and some particular projects inside this ecosystem and cryptocurrencies associated with them have grown in the opposite direction of the entire crypto market over the past 12 months, and I expect to continue to grow over the next 12 months. So let's talk about why. And so why would it do that? So basically, Arbitrum is a layer 2 scaling solution that's built on top of Ethereum. So when I say Arbitrum, like people are using Ethereum, but they're using the scaling solution built on top of it, where they're paying transaction fees in Ether, but then those transactions get settled on top of Ethereum itself. So Arbitrum in and of itself is solving one of the biggest pain points for Ethereum, which is the high transaction fees. That's one of the reasons we're seeing it grow. But we're also seeing it grow because some particular apps in the ecosystem that are having real value in the applications themselves. People are using it despite the crypto downturn, and also some cryptocurrencies that have held up pretty well despite this. So let's look at a couple of those. So GMX is one of the most popular ones. And what I'm going to talk about in this video, in terms of any cryptocurrency I mentioned, none of this is investment advice. I'm telling you to buy into any of these projects just so we're fully clear. It's not a sponsor video. Well, GMX is an advanced trading platform that lets you use leverage on chain, much like the really advanced trading platforms like, Binance or even FTX, right? Which just blew up. So that's one reason that we're seeing heavy use of something like GMX is we're seeing trends move towards on-chain finance or complete decentralized finance. Because, we're seeing a lot of trust completely evaporate from centralized services in light of the big FTX fiasco that just happened. And so rain or shine, people are going to want to use a platform like this because they can go long, they can go short, they can, do it all on chain without any central intermediaries. But what I also want to talk about is the actual GMX token itself, okay, which has been quite strong over the past 12 months. Has it even seen some significant appreciation over the past 3 to 6 months, especially relative to other cryptocurrencies like Ethereum, for example, and have to ask yourself, why is this happening, okay? Because it actually indicates some underlying value that's distinct from other cryptocurrencies that's a part of this bigger trend that I'm talking about. So GMX, it's a crypto trading platform, but the GMX token, people aren't holding it just because they somehow magically believe in the long-term, future of GMX. So they like the sentiments, they hold the token, or they're not buying it because they think it's a governance token that's going to let them vote on what happens with GMX. Part of the reason is because if you hold the GMX token, like you're actually getting a cut of the trading fees on the platform. So that's a real value proposition on an app that's, it's more like the stock market. It's about cash flows. You're seeing that. You can see the fees that are getting paid back to the users, and you can kind of track those things over time. So you can see it. It's fully transparent on chain. If you stake, your GMX tokens or you hold them, okay, you can get a part of these trading fees, which is totally different from other yield farming incentives where like you're holding a token and then just staking it into an app, and it's paying you back more of the cryptocurrency that you staked by simply inflating away that cryptocurrency. That's one of the reasons people farm these tokens and dump them. But this is a totally different situation where you want to hold on to a token because it's going to continue to pay you because the application is continuing to see growth. And so that's huge. You have an application, a real use case that's going to have demand, rain or shine, no matter what the crypto market's doing. And then a token that's going to get value accrued to that token because people are paying to use the app and you're going to get paid, by proxy. And that's going to happen rain or shine, which is a huge reason why you want to hold that token long term rather than just betting on some other speculative outcome. So, GMX not the first person to do this. We've seen other people try it. They're one of the first people to do it really well, successfully. We've even got proposals for Uniswap to turn on a fee switch so that Uni token holders can also do that. I'll talk about that more in a minute. This is part of the bigger trend. And so if I were to stop and define what the big trend is, okay, it's this overarching trend of crypto finding product market fit that can be used rain or shine. So that looks like applications that can be used rain or shine, okay? Cryptocurrencies associated with those applications that can accrue value to the tokens that people want to hold, rain or shine. And thirdly is the broader scaling technology that's making these applications more accessible to more people to where there's less friction for them to use them. So if you can do really cheap transactions really quickly, like what's going on with layer 2 scaling solutions, then that can pour gasoline on these other things to help move the needle on this bigger trend that I expect to continue off into 2023 and beyond. And now I don't want you to take my word for it. I actually want to dig into the data so that you can see what I'm talking about completely in a transparent fashion. So, we can look at the number of active users and also, number of transactions per day on different blockchains like Arbitrum, so you can see the growth, also relative to Ethereum. Because again, Ethereum is Arbitrum is a layer 2 scaling solution built on top of Ethereum. So it's all part of the Ethereum ecosystem. But let's look at these things broken down, okay? So here's the number of daily active addresses on our Arbitrum, and you can see what it's done over the past year. So this is, right here is kind of the top of the last bull market all the way here to today. It's gone basically parabolic, okay? And you can see the number of daily transactions has also gone parabolic in the same time frame. Now, if you compare that over to Ethereum, okay, Ethereum has kind of stagnated somewhat. Its transactions have been a little bit bearish along with the price action, okay? And the number of active addresses basically stayed flat. But if you compare the two, you have to understand that some of the activity that's been on Ethereum has been moving over to Arbitrum, and that's been the whole idea, is to get less activity on the base Ethereum chain and more on layer 2 scaling solutions, because that's the end game. You can go look at Vitalik's, papers, the mastermind behind Ethereum on Ethereum's end game. But let's actually crunch the numbers and look at it. I put a spreadsheet here that you can check out. All right, so if you compare the two from a year ago, the daily transactions on Arbitrum, okay, as of December 2021 was about 30,000 transactions per day. Active users is about 7,600 users per day. Compare that to Ethereum, 1.2 million. Daily active address is about 450,000. So daily transactions on Arbitrum a year later is over 10x, okay? So 327,000 daily transactions, and active addresses about 10x as well, all right, 67,000. Now, Ethereum did decrease, as we saw in these metrics right here, okay? But not significantly, all right, less than about 20%, and the active addresses stayed about the same. So, quick summary is Arbitrum daily transactions increased by over 10x, Arbitrum's daily active users increased roughly 10x, Ethereum's daily transactions decreased by about 20%, active users remain basically flat with about a 2.5% decrease. Now, if you're looking at the number of transactions that went away from Ethereum, Arbitrum made up for all that. So in the overall ecosystem, just with this one layer 2 alone, it's the most popular one right now, there's actually a net gain in the actual Ethereum ecosystem in terms of transactions and also users. So we had about a net gain of 100,000 transactions on that year time frame, and also a net gain of about 50,000 users. So the whole point of here is, even though cryptocurrency markets have gone down, the Ethereum ecosystem has actually grown over those past 12 months. And part of that's because we're seeing useful applications take off and actually retain users from those ecosystems regardless of the market conditions. So that's really a summary of the trend that's happening right now that I expect to continue off into 2023. And really, this trend is of three major points. Number one, it's applications that have a reason for you to use them, regardless if crypto is going up or down. Check, we've got that. Okay. Got cryptocurrencies that would want you to hold them regardless of what the crypto market is doing. Check that box. And then also ecosystems that are flourishing because they offer faster, cheaper transactions than the alternatives that can support these use cases. So this is really something that's very different than what we've seen in crypto previously. These aren't applications or tokens that are totally based on inflationary tokenomics and, future speculation. This is real utility. This is happening now. And the fact that we're in the depths of a bear market and that stuff is growing is pretty good proof, especially with the data that I showed you here. So the crazy thing about this is also what I'm talking about in this video is really just one Ethereum layer 2 ecosystem. There's multiple. Okay, Arbitrum's the star of the show right now for a lot of the reasons I talked about in this video, but we're really just in the first inning of all this. We've got lots of other layer 2s coming onto the scene. We're just scratching the surface. We're moving in the direction of zero knowledge rollups and so many other game-changing technologies, and I expect this snowball to continue rolling and to be absolutely crazy in the coming year or two. All right, so I hope you like this video. As always, smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. That really helps these videos out so that more people can learn about blockchain. And if you're fascinated with this technology, everything I'm talking about in this video, how can you get your hands dirty and actually take advantage of this opportunity? Well, you can go to my YouTube homepage. You can find those free courses there. They're like Udemy courses, but they're totally free. And if you like those and you went to the next step, or hey, maybe you'll take a master shortcut entirely, I can show you how to go for the throat, break into the blockchain industry, land your first job, increase your salary past 100K over at dappuniversity.com/bootcamp. Okay, you don't have to be an expert to get started today. I've helped people with zero coding experience become real world blockchain developers in a matter of months. So that's all I've got. Until next time, thanks for watching Dapp University.